Hey everybody, Joanna here. Today, real quick and blunt, I want to mention something that I mentioned in my previous video talking about the pros to getting into an HOA or a condo association, but something I didn't go into enough detail about that I think is important to mention is the HOA well funded. I mentioned before, if they're well funded, then it's probably a pretty safe bet. But if they're not well funded, or in other words, if they're broke and you sign up for that, you're going to get screwed. Basically, you're signing up to take a ride on a sinking ship, and you don't want to ride on a sinking ship. That's something that a lot of people may overlook. They get excited about some amazing looking place, and then maybe 6 months or a year later, all of a sudden they're getting a bill in the mail for $75,000 known as a special assessment, and they're like, oh crap, I don't have that kind of money. Let me talk to the HOA and work out payment arrangements. Oh wait, can I afford to pay like an extra $500 a month towards this? And if you can't, that is a big deal, because if you don't pay the special assessment, the HOA can legally buy your condo from the bank, kick you out, and then sell it to someone else to make up that money, and you're screwed out of all that money that you've been paying in for your condo. It doesn't matter how much you put into it for renovations or upgrades or whatever. It doesn't matter if you've never fallen behind on your mortgage payment. They can legally do this, which is pretty scary. So if you find a condo that you're interested in, the first thing you're going to want to do is have your agent email you any documents that they can get their hands onto so you can look it over. Looking over documents with titles like annual financial statement or budget, or better yet, if there's one entitled reserves report, then you're golden, because sometimes these HOAs will hire out outside companies to look over their financials, look at the condition of the property, and they say, okay, you've got 10 more years worth of life on the roof, on the siding, the parking lot's got another 5 years before it's going to need to be resurfaced, sort of thing. It's going to cost this much money. The HOA has this much in reserves, blah, blah, blah. You're at this high of a risk of getting special assessments, and if they don't have enough in reserves, then they're going to make recommendations of raising HOA dues or charging special assessments. So very important to look at. And if you're not a numbers nerd, you don't understand any of the financials on it, be sure to ask your agent to go over it with you to help you decide whether or not this is a good move for you. Be sure to cover your butt, because if you sign up for an HOA that's broke, you get trapped on a sinking ship, you're going to get an oar up the ass.